So something that's called time and price. Time and price is often overlooked, undervalued, underrated, whatever you want to call it. Many people do not take it into consideration when trading. Time and price is so important to understand because how the market works, the market goes into periods of consolidation at certain times of the day. Markets create liquidity at certain times of the day. We sweep that liquidity at certain times of the day. And we mitigate that area of price that swept liquidity at certain times of the day. Understanding those times of day for our trading not only prevents you from over trading, but it prevents you from staying and watching the markets for so long. You don't have to be looking at charts for 10 hours a day in order to never miss a move. There are certain times of the day that are more highly probable than others when trading, because we can see clues that the market makers are leaving behind, market makers being the true movers of market price.
What's up, traders? Welcome to the fourth in our series on smart money concept trading with Nathan Jester and the team at Aerial FX. Guys, he's going to walk you through time and price, right? Time and price, how that relates to smart money concept trading. And also, do remember these guys are doing a live stream as well where they're giving away $100 trading on the live market. To find out more about that and Nathan and the team at Aerial FX, do check out the link under the video. All right, folks, here we go. Let's get on with it.
Hey, what's going on, fellow traders? Hope you guys are doing well and enjoying your trading week thus far. Welcome to Smart Money Concepts, episode 3 of the series. Big shout out to Cam from Trading Nut for making this all possible. And I'm so excited to be going over with you guys a key concept within smart money that has really revolutionized my trading, has provided me with higher win rates, more profitability, and higher risk to rewards. So I feel it is only my duty to show you guys exactly what this concept is about and how you can implement it today within your trading. So something that's called time and price. Time and price is often overlooked, undervalued, underrated, whatever you want to call it. Many people do not take it into consideration when trading. Time and price is so important to understand because how the market works, the market goes into periods of consolidation at certain times of the day. Markets create liquidity at certain times of the day. We sweep that liquidity at certain times of the day, and we mitigate that area of price that swept liquidity at certain times of the day. Understanding those times of day for our trading not only prevents you from over trading, but it prevents you from staying and watching the markets for so long. You don't have to be looking at charts for 10 hours a day in order to never miss a move. There are certain times of the day that are more highly probable than others when trading, because we can see clues that the market makers are leaving behind, market makers being the true movers of market price. As they leave clues indicated through these smart money concepts that we teach, certain times of the day provide the highest probability of that trade playing out for you. So that's what I want to go over with you guys today, going over a couple of examples as to what price does around certain levels and at what times of the day you should be looking for price to do certain things. So let's first start off by talking about GBP USD. Before I get into any concept that we will ever go over at any point, I always have to start off with market structure. If you don't know market structure, you can get time and price down, you can get supply and demand down, you can get everything down and packed, but you could still lose trades because you don't understand market structure. Let's first start off by talking about the higher time frames. 4-hour time frame, where are we going? We're bearish, okay? Overall bearish in the market. Lower low, lower high, lower low, lower high, lower low, lower high that has just come up and filled that imbalance, retesting this prior low, okay? Lower high, we're looking for a lower low. So overall, we should be looking at taking out 1.3, which we actually did last week, but I do believe we are going to continue lower into 1.28, which I'll discuss with you in a little bit. However, as I say to my members in my VIP community, it is okay to trade counter trend as long as 1, your rules are met, 2, the entry is occurring in certain times of the day, which we'll be discussing about soon, and 3, there is room to go in the opposite direction in which the overall trend is. Meaning if the overall trend is bearish and you're looking to trade bullish, make sure that there are certain levels to the upside that need to be met that's appropriate for price to come into that's trading counter trend prior to continuing with the overall trend. All right, a lot of this stuff is discussed within our free YouTube channel, so check it out, Aerial FX Trading on YouTube. We talk about all these different concepts. But time and price is something that's oftentimes overlooked and not really taken into consideration when trading. So let's divulge into what's going on in here. We have accumulated in price. We have sprung. I'm not going to get into all the details here. We have sprung, we have tested, and we have continued to the upside. We have broken counter trend structure to the upside. So in this time frame, we are bullish, right? We had to come back into 1.33 to mitigate price here, fill in balance, and retest the prior structure, creating that lower high in the market, looking for a lower low now. Where's the structure? Higher high, higher low, higher high, lower low. We have broken structure back to the downside. However, we have come into structure here. This doesn't mean that, once we have broken structure, we're going to pull back and go long, because we know we're overall bearish, right? But if we get reactions around this area of demand, especially around areas of accumulation, and we have a counter trend break of structure back to the upside, the only way in which I would trade that is if we have room to go back to the upside further, having an overall pullback in the market. And we did, because we needed to come into an overall level of supply here that was met to the exact pip, essentially. So that is why I deemed a buy, from which I'm going to be talking about soon, to be valid. If we had already come up into my designated level, I don't care what kind of price action is going on in here, because the overall pullback was probably already made. The supply level was hit. We should be looking for overall shorts in the market, but we haven't hit that level yet, which is why I like to buys from the level in which I'm going to be talking about. So I'm going to go to bar replay here, and let's look at the areas of mitigation. Okay, so after our accumulation, we sprung, meaning we broke structure, and we are continuing to the upside. We have come into demand, and here we have filled lower time frame imbalance, creating more imbalance after this move here, right? So we have our last sell to buy, 1, 2, 3 pin pattern, engulfing candle, imbalance. This has not been mitigated yet. I want to look to see what price does around this level. Noting the fact that we are still bearish, I am not going to be placing a sell limit directly from that level. Now let me show you where that is. I would not simply place a sell limit from that box, this level here at 1.3056. Even though we did see a reaction, we are still overall bearish. What I would simply look for is a reaction from this level, and we can see that we have swept all this liquidity, a reaction from this level, and then a retracement back down into it. After breaking counter trend structure, where's the counter trend? Lower low, lower high, lower low. We haven't broken here, so I'm not looking for a pullback yet, but now we have broken it higher high. And again, we have stopped in here. I was waiting before placing the buy limit to see if price would come up into my overall level of supply. We haven't reached that yet, so by the time price got back down here, I deemed this to be valid. Now, in relation to time and price, we have to understand at what times of the day price is often in consolidation, creating liquidity, what times of the day the market makers take that liquidity, and what times of the day the market makers mitigate those levels. So we can see in here, oftentimes you will see periods of consolidation during Asian session. This is all throughout Asian session. This is the Asian range. This is not an Asian session pair. This is a London and New York session based pair. Consolidation, creating liquidity, a low here, 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 a low here. At what time of the day does price sweep this liquidity? We have a strong move to the downside to not only mitigate that 5-minute level I just discussed a couple minutes ago, but sweeping this liquidity. What time did this occur? Well, this occurred from the last point of this buying volume here, when the selling started to occur. This started at 4:25 a.m. Eastern Standard Time. This is prime London session time. Oftentimes, the beginning of London session, you will see a sweep of liquidity. Okay, so just put in simple terms, Asian session range oftentimes, and I know this is just very pretty, okay? Don't expect this to look this pretty on the live charts. Asian session range, London session manipulation, break of structure, New York session, retracement, mitigation, continuation. That's really what we want to be seeing. Now, if you had no experience with time and price, how would you know that this is probably the most highly probable level? Yes, you could just say that, We have swept liquidity. We have come into an area of demand. We have broken counter trend structure. Would that be good enough to trade? In my opinion, yes. However, understanding that the sweep of liquidity happened, between London session and the end of London session, which ends at about 11 a.m. Eastern. This is 4:50. Let's just call it 5 a.m. Eastern time. Sweeping that liquidity, prime London session, it gives you even more conviction that this level is going to be held. Because oftentimes we will see that manipulative move to start the session, a retracement or a break of structure back to the upside here, a New York session retracement back to the downside, and then a continuation. All right, so we will mitigate price probably around New York session time, maybe the start of Asian session, close to New York session close. I don't like to trade after about 12 p.m. Eastern time. However, if we have all of these rules being met and we have time and price when it comes down to the manipulative move in London session or New York session that has swept liquidity and coming into an area of demand, I will look to trade it regardless. So we had that sweep and we broke counter trend structure here. We had the 5-minute last sell to buy. We know this is the last sell to buy, the area that swept liquidity. Well, really, this is the area in which it swept liquidity. This candle here took the liquidity, but then we had a little bit of a push up back to the upside, a little bit of a test, one last run, and then the expansionary move. So this is really where I want to be buying from. The imbalance we can see here, there's only buying volume. No selling allowed here yet, or no selling offered here yet, I should say. We haven't come down and filled that imbalance. So this is going to be my entry. We can see that we have broken higher this time frame structure, counter trend structure. We have swept liquidity. We have come into a 5-minute area that was a test of the accumulation way over to the left. So this is where I'm going to be placing my buy limit. What time did this occur? London session, prime manipulation time to be looking for liquidity runs. We mitigated and we continued. Take profit at the previous high. You could have set it at the negative 27, but just for this sake, around 1.3160. This is a 1 to 8.9 risk to reward. You could have taken it up into our overall level of supply here, the last buy to sell, and you would have gotten pretty much wicked out of your take profit. So very good, but I'm going to count it just as a 1 to 8.9 from the prior high. All right. So that is one trade that you could have taken that provided not only a lot of smart money confluences, but had time and price involved. So look for price manipulation to occur around London session open, which is around 3 to 4 a.m. Eastern Standard Time. London, New York session changeover, which happens between about 6 to 8 a.m. Eastern Standard Time. And then New York session mitigation, or you could have a New York session price manipulation around 8 to 9 a.m. Eastern Standard Time, and that's about when the stock market opens as well in the U.S. So 8.9% risk to reward, hit that TP very swiftly, got a wick entry. Another one I want to go over that has beautiful time and price. Now going back to structure, remember, we have come up into this area of supply. We have fell. We have pulled back into this 1 hour doji candle, the supply level, and then making a lower low again. Now, the reason I didn't take my limit here, my sell limit, was because what were we still doing? Higher high, higher low, higher high, higher low. We never broke this structure. If we had closed below it, then yes, I would have looked for this area to be mitigated for continued shorts, but we never had that yet. We created a higher low. So what could have happened? We could have probably had another run, maybe coming further into this wick potentially, then falling. So I didn't trade this. I didn't place my sell limit there. I waited. What would price do afterwards? Then we made a lower low. So we made a higher high, higher low, higher high, higher low, higher high, lower low. Broken structure. We should be looking for pullbacks and then short. I didn't see this trade here, but I recognized it after the fact. What did we do? We know we're overall bearish. Now our higher and lower time frames are in conjunction with one another. Well, what happens? Equal highs, liquidity formed. 15-minute time frame, scroll over. 15-minute time frame, we can see our last point of supply. This point of supply swept all this liquidity, this push up, mitigated this area of supply, and then we fell, making this the newfound supply. Equal highs prior to the supply. I love liquidity being formed prior to a level being met. What do we do? Of course, sweep it. Retail traders are buying because of the breakout. Nope, right back to the downside, take their stop loss. Because the market makers sweep the liquidity, create liquidity for themselves, and then move in the overall direction. So going back to the 1 hour time frame, we can see here what happened. When the liquidity was swept with this candle that mitigated this level, what time did this occur? 9 a.m. Eastern Standard Time. What is that? What did I just say before? Prime New York session. New York session open. Okay? Prime New York session. Stock market is just about to open. Manipulation before the overall session occurs. And guess what happens? After that, we roll over back to the downside for the rest of the day. So the manipulation occurred at 9 a.m. Eastern, prime New York session time. Time and price. You oftentimes see these large manipulative moves that come into areas or mitigate areas that have already, created time and price themselves. Meaning, when you come up to mitigate a level, oftentimes you will see that within the correct times of day for the specific pair that you're trading. Obviously, hoping that you sweep liquidity because that's what you should be looking for. But where would price mitigate? Well, it mitigated an area that one came into this supply level. But what time did this supply level occur? 10 a.m., 10 a.m., 11 a.m. Again, this is the end of London session, our last point of retracement in New York session before the overall New York move throughout the whole entire day. So 10 a.m., push to the upside, 11 a.m., one more final push, and then we fell for the rest of the day, making that lower low. Okay? So we not only swept liquidity at the right time of day, but we mitigated a candle that came into another area of supply at the right time of day. So you could have placed a sell limit right here, but if you didn't, that's okay. What did we do? Lower low was formed. We actually took out this low here, and now we're looking to trade lower. So we can see that we are never going to come above this level now without breaking structure, of course, because what's the market structure looking like now? Lower low, lower high, lower low, lower high, lower low. This is the high that made this low, that took this low out. So now we shouldn't trade above this level. Okay, and because we have swept liquidity here and filled in all of these areas of supply, everything in here is accounted for. We shouldn't trade above this level now. Zooming in. What time did this form? 9 a.m. Eastern Standard Time. Creating liquidity prior to this move. I just love this. I love creating liquidity prior to the overall pullback because one, it creates the draw on liquidity to take before the overall mitigation zone. So that lower low was formed. We pulled back very strongly into this level, the time and price, 9 a.m. Eastern, and then we rolled over back to the downside, mitigating that level and then continuing. What time did we mitigate? Yes, we did mitigate at 21 o'clock, which is during Asian session. So it's like during the evening, nighttime on the US. However, when did we make the move? When did we finally have our last run to the upside and make our final move to the downside? Let's go to the lower time frames. Even though this candle in here didn't take liquidity, we moved away very, very strongly from this level at 7:30 Eastern Time. What did I say that was? London, New York session changeover. About 7, 8 o'clock is when London change over to US. We oftentimes see a very strong volatile move within pairs. I would have liked to have seen a buy that swept this liquidity. Unfortunately, I didn't do that, but that's okay because we were already in this trade to begin with. And then we had a strong move to the downside for the rest of the day. Time and price. Time and price can really help in your trading because not only can you see at what times of day are levels looking to be fulfilled, price being mitigated, liquidity being taken, but it also prevents you from overtrading. It prevents you from looking at a screen for 10 plus hours a day waiting for a setup. I always say to my members, look for trades between the hours of about 3 a.m. Eastern Time to about 12 p.m. Eastern Time. All right. So what is that? Like 9 hours? 9 hours. However, you don't have to be looking at the charts the whole time. You should have done prior analysis, understood where your levels are, and then look for those levels to be met during those times of the day. So you shouldn't have to sit at your computer for hours upon hours upon hours a day waiting for price to move in the direction you want it to. Having a set time frame between 3 a.m. to about 12 p.m. Eastern, you can look for these levels to be met, and if they aren't met between those times, you can invalidate any setup. That's what my rules look like, and that's how I trade, and that's how I've seen tremendous profitability without having to be present on the charts for the entire day, which you shouldn't be. You shouldn't have to. You should be able to understand where price is going based upon the concepts you've learned in market structure, and then looking at certain times of the day where price is probably going to mitigate, going to take liquidity, et cetera, and then moving on with your day after that. So we have mitigated that level. Time and price has fulfilled itself yet again, and we have made a strong move back to the downside. We're looking at an overall lower low in the market. Now, this doesn't have to do with time and price. However, I feel like I want to go over it just because it looks really good. We had an area of liquidity, equal lows, swept. What time did this occur? I guess it is time and price, as a matter of fact. 2:45, 3 o'clock in the morning. Again, what is that? London open, sell to buy, coming back up into that level. We had an area of demand. I would not have bought it from here because we're overall bearish, but if we get a reaction, we could potentially looking to buy, right? And that's what we did. We accumulated. Slow down in price, reaction from that level. What time did this happen? Oh my gosh, I wasn't even preparing for this. I was preparing for all these. I didn't even see this. I'm just looking at this right now. 9 a.m. Eastern Time. What is that? New York session, London session, changeover, New York session, manipulative move. Lows taken, swept liquidity, coming into that area of demand. Reaction, mitigation again, breaking structure back to the upside after the accumulation, the spring, the test. What time did this, what time did this test occur? 3:45, 4 o'clock. We mitigated. Okay, we mitigated a candle that mitigated this candle, that mitigated this candle, that swept liquidity here. This candle swept these lows right here as well. This candle at 3:45, London session open, swept these lows. You have a wick here, wick here, wick here, wick here, wick here. Retail trader, lower time frame support, invalidated, right? People were selling based off the breakout. Nope, right back to the upside. That's why retail doesn't work. I keep saying it over and over. Anyways, mitigation occurred there. At what time did this happen? 3:45. We have a little bit of an imbalance. The sell to buy occurred at 3:45. I'm looking at taking price because we have room to go to the upside before continuing down. That's why this is counter trend. This is still valid. I'm looking at price to pull back into this level. Maybe, it's getting to a point where, it's close to the end of London session, which I don't really like to trade past 12 o'clock. So we have about another hour. Maybe this could occur, this mitigation can occur London session tomorrow or New York session or something like that. But obviously, we have liquidity, descending liquidity. We want price to take this, take all this liquidity here and mitigate this level around time and price, and then continue back to the upside to 1.31, which is really where we would like to short this market. All right, so target's 1.28. If you're looking to take this, I'm looking to short as well from 1.31. Overall structure is bearish. We have mitigated this level here, time and price again. Hopefully, if we come back up here and short off, the mitigation and the imbalance fill can occur during a time and price event as well between 3 a.m. and 12 p.m. Eastern. All right, one more I want to go over with you guys is AUD-USD. AUD-USD was yet again a counter trend trade. Now, I don't like to trade counter trend too often. However, this provided a really nice setup, and it met my rules and it met time and price. So I figured, okay, we got to take it because it met my rules. If I lose, I lose. I don't care because I know my overall strategy is profitable. So now I wasn't trading in here yet because market structure really hasn't shifted yet, but I could mark it up. I'm going to go to the 5-minute. Sell to buy, equal lows, taken, mitigated, higher high again. Okay, the higher high was formed. We came down, we mitigated this level here, our last point of demand, 7:30 a.m. Moved away from it, pulled back into that level again around 9 o'clock. New York session gives you multiple potential entries. Usually there's a mitigation at the start of New York and a pullback to finish New York for a continuation the rest of the day. That's what we saw. Mitigated at 9:05, 9 o'clock, where the stock market opened, prime New York session time, moved away from it again. Really just wanted to confirm the longs here, because what we could have easily done was reacted off of this level of supply, which we did, and just made it a lower low. But we had a reaction from that level, we failed to make a lower low, and then we made a higher high. So that kind of confirmed longs for me. Pull back into our last sell to buy level. What time did that occur? 10:45. Again, this is between 3 and 12 Eastern Standard Time. So prime New York session gives us one last opportunity to get into the market. Again, what did I say just a few seconds ago? Usually you get some sort of price manipulation in London session or New York session, and then a pullback in New York session for then the overall move for the rest of the day. That's what we got. Another pullback to finish London session and to continue with New York session, and then we just continued the rest of the day. So all the way back up into our overall level at 7,450. This is a level of supply right in here. 7,450. Level of supply. Just zoom back out again. Just want to make sure that was the right area. Yep, level of supply. We can see lower low, lower high. This is the lower high that made this lower low. Okay, we closed below this level. This was the high that formed that. So our targets were right in here. Not to say that this can't go long. We probably easily could have an overall pullback in the market, coming up into higher time frame levels of supply. But this is still the lower time frame structure, which is why I wanted to close around that level just in case we did respect. Okay, but the overall market is still bearish. So we can see time and price yet again presents itself, provides us a great opportunity to enter the market and get a phenomenal return. This is a 1 to 5.6. The 2 GBP USD trades were, let's see. This one was a 1 to 10.6. And the other one here, that if you took your currently floating, targets are at 1.28. This is a 1 to, oh no, that wasn't right. The 1 hour. Sorry, guys. Yes, okay, right here, perfect. 1 to 10.46. So I'll say 1 to 10 and a half. I'm going to just add this up. 10.5 plus 10.6. And I think the GBP USD or AD USD one was 5.6, I want to say. Yes, 5.6. That was 3 trades. That's 26.7% divided by 3, an average of 8.9. So a 1 to 8.9 risk to reward for each of those trades on average. Meaning, if you lost 8 trades in a row and then won your 9th one on that average risk to reward, you're still profitable. What does that tell you? Win rate doesn't matter. Risk to reward does. Percent return does. So having an understanding of that, an understanding of time and price in relation to overall smart money concepts, if you implement time and price into your trading and make that a part of your rules in your trading plan, you can see significant risk to reward and high probability setups. So not only does your win rate increase naturally, but your risk to reward can as well, because you're zoning in on specific time periods of the day. So very small areas of volume or areas of price that price would probably likely to come into at certain times of the day before moving away, increases your risk to reward, may increase your win rate as well. Stuff that you can start learning about and implementing into your trading today. Obviously, everything takes time and practice and experience. Don't expect to just become masters at this right off the bat. Obviously, you still need to understand a holistic point of view, a holistic understanding of smart money concepts, and especially market structure But if you already do have that and are looking to add to your trading, time and price is also very, very crucial. Has allowed me to really increase my win rate for our VIP members and also provide great learning opportunities for people learning smart money concepts. Increases risk to reward as well. So guys, I hope you enjoyed this video. I hope you learned something. If you have any questions, please feel free to hit us up on Telegram at ArielFX Trading or message me on Discord at NathanJJFX. You can even go to our website, www.arielfxtrading. Contact us there or go to our IG Ariel___FX. So it's a double underscore. Hit us up on all social media platforms. We'll be happy to answer any questions you have. This is concerning to you. If you have any questions about what I went over, if you don't fully understand what I mean by certain things, please feel free to ask. Questions are free. I'm not going to charge you guys for anything like that. I really want you guys to succeed. That's why I'm doing these free videos for you guys. So again, big shout out to Cam from Trading Nut for making this all possible. Thank you guys. I hope you enjoyed Smart Money Concepts episode 3. Next Wednesday, 8 o'clock Eastern Standard Time, New York session, we will be doing another live session going over time and price again. So just to really reinforce what you've learned here, doing a live session and looking at time and price as a key factor for entering some trades. So make sure you join in on that live session next Wednesday. I believe that is the 27th. Yep, the 27th of April, 8 a.m. Eastern Standard Time. We're also going to be giving away $100 for someone who participated in our last live session, who can answer a question based off of what you learned last week. So join in. You could be a $100 winner and learn some stuff and make some money as you go. So guys, hope you have a great day. Enjoy the rest of your day, and let's keep killing it, guys.